Welcome to another episode of That Crazy Triangle Guy. Here we are looking at Bitcoin liquidation heat map on the on CoinGlass. I have the symbol thing chosen there. So instead of looking at the exchanges individually, it's some sort of combination of multiple exchanges. And looking at the 12-hour time frame. There was just recently a lot more yellow up here in this area, and it's disappeared over the past hour. I'm thinking, you know what, maybe since the 4-hour candle just printed at 12 o'clock, that may have been when things started disappearing. Did I just refresh this? Yeah, we're coming right up on there. So that's signaling to me that they're getting out of the way. They're not going to put much of a fight forward here. Now, also, looking at CoinGlass on the order book, Bitcoin order book, and we're looking at the Bitcoin versus US dollar or USDC. And there was a lot of orders, big orders here that have also disappeared. So, I mean, the next biggest order I see over here is at 104. Yeah, around 104 region. That makes a lot of sense because actually I was thinking we'd hit 110 maybe and come back down to 104. So it looks like they're looking at 104 for a decent target or whatever. So let's look at the USDT pairing. And yeah, here there was even bigger orders here at 102. You kind of have 104 and 113 there at 102.5 and 103. But that's much smaller than there was like orders in 200. There was like a 200 something order and whatever. And here 163 at 105. So looks like we're going to blast through 102 and set a new high, maybe up at around 104, 105. We shall see. I'm thinking 110 heading in. Well, that would be Monday. Now let's go ahead and look at the chart. Yeah, we just started moving. And we are above this high here, or right at it. We wicked above it. We just broke above it a little bit, looks like. So I was expecting this to happen. I was expecting that it would happen by morning because I thought maybe this consolidation would extend a little bit further over to, you know what, let's get rid of this. This is the, this white line is the target from that W pattern we were talking about before, and we've met that. So let's just get rid of that. I thought perhaps this consolidation could continue to the edge of these parallel channels, these three white parallel channels moving upwards diagonally. And that would put us at market open over here. And then I was expecting this to shoot right up. Still may consolidate here, but with all that stuff disappearing, you know, Europe might get a jump on US or something like that. And then what would be expected would be a move up to the top here through the three channels up to here. And yeah, that does take us up into the 104 region up here because, you know, consider market open is over here, and then we come up. Yeah, that puts us up in this range over here. or even farther. I'm really zoomed in here, I guess. Where's Friday, end of day? Right around here. That makes sense. We'd end up here. It's the edge of the channels, and it's also this green dashed center line here. And it leaves room for us to pump Monday as well, which I believe we will continue up maybe over the weekend. You know, it would be really nice if we form another gap on CME futures, because we're getting away from that 74,000 or God, 74, 77 to $82,000 gap, and we need to form another one so that people are scared that we're going to come down and fill it. I'd like to see that happen soon. Forming a gap would indicate to me that we probably have a big move upwards. I do believe that we're imminent on that right now. Now, Monday, I believe we could come up here to around 110, and this is the top of our. Oh, not there. It's. I gotta squeeze a little bit more. Right there, where that white and red line is, that's the top of our white channel, the most important channel in Bitcoin history, from which all parabolic bull rallies start. And these three skinny channels right here, heading up diagonally very sharply, could be the start of that parabolic bull rally right here. Now this red channel next to us right here, that's thin. This is the bottom. This is the center line here, and the top is over here. This is at a slope consistent with the all previous bull rallies from 2021, 2017. They are all the same. They're all the same slope, and that's what this red channel represents. Now you can see that these three channels here are very similar in slope to this one, so it would make sense that this is the move, the start of the move, which will be confirmed probably with a move up out of here and then a retest to the top of the white channel at some point. Now I'm zoomed in on the 1 hour, so I can't even scoot over. And well, anyway, we'll figure that out in another video. But so I wanted to discuss a couple other things. Well, let's see where we left off. What happened today? Remember, we were back here, and when I was making the video, we were just starting this dump right here, and I thought that possibly we could have. You know what? We have to switch to the 1 hour now so we can see our levels, I believe. Yeah, okay, here. So we had started coming down, and I thought possibly we would stop right here. But more probably we would come all the way down to the fuchsia colored line here. And while we did try to hold this here, we did end up coming all the way down. And that's fine. That's a support level that needed to be tested. And if you notice, that's why I leave all these lines here. I could have easily got rid of this fuchsia colored line a long time ago. But if you've been paying attention, that's the top of, I gotta sneeze, hold on. All right, we're back. That's the top of the symmetric triangle that we were trading in, back a while ago. And what did we do? We came down exactly to test it as support. Now, as you look at this, you're like, oh, well, you wick through it, and you have so many lines on the chart, you're going to hit something, right? No, because if you zoom in, actually, let's even go on the 1 minute. I don't know, we got to find it. All right, I found it. So if you zoom in here on the 1 minute, you can clearly see how these lines acted as support here. Came right down and we only came through this, in a matter of a few minutes there. Otherwise, we closed all our bodies right up above here. Now, I mean, we're talking about, so that's 597, 520 to 490. We're talking about a $30 difference there. So I can only draw these lines so exact, especially when they cover a span over a long period. So anyway, so what's interesting is when you combine the horizontal and vertical and diagonal lines, you can kind of get a time frame of when we're going to do stuff. So it made a lot of sense that we would come down and test this future line for support, but also that we would test this horizontal support area here. And where did we do that? At the intersection of those two lines right there. So that's how you can kind of try to time things. Now, let's take you back a little bit. Let's go to a 4 hour. And I've shown this time and time again, but there's our fuchsia triangle right there. Here's the base right here. And there's the top portion there. And we came above it here a little bit, came below it a little bit with fake outs to the upside and to the downside. But I zoomed in too much. Was I pointing to this line before? I should have been. So we had, anyway, regardless, I'm not going to get into that. I've gone over that time and time again. So the apex of this, not apex, vertex of the channels right here on Sunday. Guess that's not really important. But okay, I'm getting in the weeds here. So that's what happened today. We did bounce off of this. We did find support here and a huge wick to the upside. Got all that sucked up right back up to where we were here. And then that gave us the go ahead to keep moving up here. Now, we've also come up above the top of the Gaussian channel. So I do believe that this is a valid breakout or for real. It's for real, man. But what does bother me is, and they might have done this just to fake people out, is that we did not close a daily candle outside of the top of the Gaussian channel here. We got just underneath it. And they might have let that happen to lead people to believe that we were going to come back down and remain within the Gaussian channel. That's the only thing I can think of. Unless this is just a big fake out. And I bet that's not. I don't think that's the case. Unless, see, you just think too much here when you try to overanalyze stuff. Unless they pulled all those orders earlier just to let this thing run, and then they're going to come back in. But that's not really. I don't think that's going to happen. I think they just realized they can't stop it. They're moving upwards. They're moving their position upwards. They're letting this thing run. Now, okay, the other thing I wanted to go, oh, well, there's quite a few things, important things I want to go over, so let's get to them. All right, so we're on a much easier on the eyes chart here. Many fewer lines. First of all, those horizontal lines are alerts I have set up, and I don't want to turn them all off and turn them all on and make them disappear. I'd rather just leave them there. Now we're on a daily time frame looking at Bitcoin US dollar index. And while we have this clear chart, let's just go over these trend lines here. The green one is the point of no return, I guess. It's connecting, what is that, September 6th and October 10th. Excuse me. And you can see we're really, really far away from that. And if we did come down to that, that's around 84, 83, 84, something like that. If we drop straight down from here. And then, but the main ones that we seem to be holding, first of all, we have the yellow line is connecting these wicks from October 10th to November 4th. And we reached that with this huge wick downwards here. So that was looking really, really scary until I realized, and we even closed below it, until I realized what we were really doing is if you connect the candle bodies, the closes of either the red candles or the green candles, I chose the red candles, the down days, the down closes. So if you connect that candle body there, and I've done so pretty accurately, and this candle body here, if you draw your trend line through there, you can see that actually what we've done is respect that pretty damn to the T with this red candle body here, and then even this huge dump downwards. We went way through everything. We came all the way up and closed that candle right above the red line there. Almost so much so that we started the next candle within it as well. So that's that. It shows that we are trying to hold that as support. So that should, might play a role in the future when we do have a pullback and where we might pull back to. Now, it's the white channel that's going diagonal. Well, it's the only channel here. That's the white parallel channel, the most important channel in Bitcoin's history, from which we start all parabolic bull rallies. And as I was discussing earlier, this may be the start of it. If we continue up here, maybe do a little pullback and then blast off in the first week of February, maybe. And possibly, if we did blast off, we'd come back down and retest it. But there's a long time before that happens, so anything could happen. So what we're doing now, clearly you can see that we're consolidating within this channel. We consolidated in the upper portion of it, came back down, consolidated in the lower portion of it. We are on a daily time frame. We can go back in history and see how this channel has played a significant, acted as significant support and resistance. Hey, what's that guy? That's a funny looking guy down there. So you can see even in the bear market, we came down to it here, broke through it, and it acted as resistance here. And then the previous bull market, what we did is rather than consolidate it within it after COVID, we, I imagine that if we didn't have COVID, maybe, I don't know. I don't know. You can clearly see how this channel acted as support, the top of it, for quite a long time until we finally bounced off of it, and that's where our parabolic bull rally started. So that was 2021. And this is the mid-cycle rally. In the bear market, we came down to this channel again, consolidated within it, and did this little mid-cycle rally in 2019. The previous bear market, or bull market, I guess, channel acted as resistance to us. We came up in it a little bit, up to the center line of the channel, and didn't really consolidate in it at all. We consolidated below it, and then we started the parabolic bull rally as we pumped through it here, came back down and even tested it as support right there before continuing the move upwards. Now let's see what else. I don't remember what else, how it acted in the past. You can see it was resistance here, kind of. It's a little bit far away. It's not exact there. And here we are. We consolidated within that channel for a little bit in the bear market in 2014. And then even here in 2013, our bull rally started when? After a consolidation move within this channel. Right here. Not much, but clearly the top acted as resistance, came down, acted as support, went sideways along the center line for a while, then boom. So when I say this is the most important channel in Bitcoin history from which all parabolic bull rallies start, I kind of mean it. Kind of mean it. Now, did we have any other? I don't think we really have any other interaction with it, no. But that's quite a lot. And here we are today. Here we are today. What do you think is going to happen? Now, I did think the parabolic bull rally was going to start in March. Why? Because we were here. I mean, last year, a year ago, almost a year ago. We came up through here like this, consolidated a little bit, came a little bit below it, came back in it, and I thought, you know what? We're going to start our bull rally right here. But you can see there's other plans. We're getting a little bit ahead of ourselves, so we needed to stretch it out a bit. But now we are back in the channel, and I'm expecting us to blast off anytime. Oh my God, we're at 102.2. We're almost at a new high. I mean, a new higher high. I think it's 102.7 we got to get to, right? Let's see. Yeah, look at that. We're almost there. We are almost at the. We're almost at the candle body close, but 102.750. That's right. I remember. So we got another 500 points or so to go. Now, what I want to go over, and people are always calling pullbacks. Once you start rallying, it doesn't take very long before people, start talking about, oh, we're going to dump here, we're going to dump there, we're going to dump. Such a bunch of bullshit. And what's interesting right now, I can see we're breaking out of a downwards bull flag channel here. Or whatever, the downwards parallel channel. You can see, do I really need to draw another channel? I could. Let's draw a channel. Actually, let's connect this body right here. Let's go completely conservative and connect that body and that body. Yeah, see. So we're breaking out there. That's completely conservative. And it's not real. Anyway, you can see we're breaking out. I don't need to draw it any clearer than that. So let's get rid of that. And I believe if you look at the these guys, they're doing the same thing. And see, same thing on S&P. So I do believe that with the inauguration, we're going to see a pump here. Now on my other chart, I have a parallel channel also heading upwards this way, covering the long-term upward movement of the S&P, and it looks like we could dump down like 5% to the base of that channel, or pump up out of this bull flag here to, I don't know, the center line or top of the channel. And I believe that's the move we're going to make. We're going to continue upwards, same as Bitcoin here. Now, so let's get back. So much stuff I want to discuss. To Bitcoin. Oh, wait, let's go back a second. Let's see where futures is at. Oh, well, yeah, that's 500. Futures is, CME futures is trading at above a $500 premium to spot, so that's bullish. They're bullish on Bitcoin. Now, so I wanted to talk about moves upwards after dumps like this. This was a significant dump below the lows we made before here. I mean, it's not a significant dump below them, but it's a significant dump and below where we'd previously been consolidating. A little bit lower. And after moves like that, like back here in June, what did we do? We had a 30% move. Well, let's go to this one first. 28% move before we pulled back. We pumped. We kept going. And then we had another dump later on. Like a month later or something like that. Oh, what am I doing? I don't know what I just did. I'm meant to hit this guy. And after this big dump, oh, that was July. That was the July dump. And then we had the August, whatever, the Japanese carry trade dump. And then initially we pumped 27%. But that was like a V-shaped recovery thing. And then we consolidated further, but then kept moving upwards to another 32%. Then we had this other dump in September. And we came up initially here 16%, and then had a little pullback, went up 21%, and then up to 27% before seeing a much larger correction. So on these moves, we've seen, 26 to 30% moves upwards before seeing another major correction. Now, one could argue this is still in our sideways downwards consolidation here, but that's what you're arguing we're in here as well. Now, be it too, the width of this consolidation is smaller than the others, but as I just showed, we're breaking out of it. So That's another thing to consider there as well. And if you want to go back here, I mean, you can look at the same thing. You can measure this yourself. You can see when we've had dumps, and we have big moves from those dumps. Big moves from those dumps. Like, what's this, as a matter of fact? Because this looks kind of similar. We were consolidating, and then we did one last one that went down a little bit further. Now, this is earlier on in our beginning of our bull market, too, so you got to take everything with a grain of salt. Everything's a little bit different. Oh, and I didn't quite. Let's see, we came up. No, only 10% there. Yeah, so I don't like that one, so I won't believe that one. Well, that's the very beginning. That was right after the bear market. That was the start of our bull market. So people are probably more something or other. Now, so that's one thing I wanted to show you. And let's look at what we've done so far. What have we done so far? Stop it. From there to where we're at right now is 14% move. 26%. Well, let's go 27%, 28%. That takes us to 114. I think Crown was calling for like a 114 by the end of February. And that takes us up to the top of the white channel, February 7th, 114. But that's neither here nor there. I don't think that's a significant number. I don't think 110 is significant. Maybe we go up to 110, pull back to 105, and then back up to 114. Could very well be. And let's talk about something else. There's two more things I want to talk about. Is in Crown, I'm talking about Eric Crown, and you should watch his channel. You should watch it. I mean, he's different. He's a statistical guy. Now, I go with a lot of channels, obviously, and trend lines, and you use the RSI and the stochastic indicator oscillators and stuff like that. And yeah, you should get his. And then other people use the short what's the word I'm looking for? I'm looking for like on-chain analytics and looking at heat maps and other things. And then other people have the little cipher indicators with all the colors and the waves and the dots. And so it's good to look at all different things. What's really, really funny is Crown always puts out these targets and or key points that would like to see us above or below or whatever. And when he says that, I'm like, oh my God, I know he's a closet line drawer, because the numbers he says coincide exactly with like the top of one of my channels or one of my trend lines at the time that he's calling it out. I'm like, oh my God, that's the exact same number. So it just goes to show you come up with the same results with different, because lines on charts are actually can be represented by mathematical equations, and that's all that some of these other curvy lines that they use are. So anyway, so what he did bring up last night, and I had been meaning to bring this up because it's one of his strategies, and it's a really, really good one that I've been watching over the past year or so that I've been watching him. It's been over a year. I don't want to say 2 years, but it's the BBWP here on the bottom on the 5-day time frame, and I've been watching this because there's two of them, the 5-day and the 2-day, but I like the 5-day better. It really calls good moves to the upside, and after consolidation, what am I trying to say? After low volatility, after consolidating, after a period of time of low volatility here on the BBWP, which is Bollinger Band Width Percentile, on a breakout from this low volatility, we see huge moves in the price. And this is the 5-day chart. And depending on the direction of the stochastic oscillator, gives you the direction. Watch Crowd and he'll explain it better. The direction to the upside or the downside. It goes with the stochastic oscillator. Now, what I want to point out is it's not necessarily the direction of the stochastic oscillator leading into the breakout. A lot of times, even when the oscillator is pointed downwards, it's that breakout then that points it back upwards. So you really have to have a feel of where you think the market's going to go, even though it could be pointed downwards and you're thinking, no, we're going to go up. What happens is, the oscillator then turns up on that breakout. And but one thing I do want to note is that if you're waiting for this to break out above, he has a line at 10%. So when it breaks out above 10%, by the time it does that, a big part of the move has already been made. So you're going to miss out. So we've already been consolidating down here at low volatility for quite a while. Now we can look, let's make these things a little bit shorter here so we can see our chart. We can look at times in the past when we've had this. Let's go do that. Most recently, let's put that on there. Most recently, right here. We were consolidating for quite a while right here. And that is 24th of June. And then we broke out. I think I remember this. We didn't quite really get a breakout here. It did, and then it came back down, and it was kind of a wash. Nothing really happened. So where did that really start to break out? Yeah, right here. This is a bad example. Well, it's a good example because you can see the stochastic oscillator was pointed downwards here. So this was a bad one. This is a failed one, and we continued downwards. We then tried to break upwards, but continue. Yeah, it was kind of weird. So that's what happens when the stochastic oscillator is pointed to the downside. You do get a big move downwards, but then you got a big move upwards as well. But since the stochastic oscillator is pointed downwards, you got that downwards move first. How about right here? What happened right here? Oh, yeah, you can see. Now let me zoom in a little bit, because you can see this is what I'm talking about. Where's the breakout? The breakout is actually starts right there and then is confirmed over here. And if you're waiting for that to happen, you just missed the entire move over the course of about a week and a half. Now we did, after another week and a half, have another big move upwards. So what is this? So on this move here, which you wanted to catch. Well, it started actually before we even were consolidating very long, but let's say right here, we didn't even break out yet right there, but that's where the move started. So if you wait for the breakout, you're going to miss it. So the first week and a half, we had a 22% move to the upside, even starting from here, not starting from back there. So 22%, then after a couple weeks consolidating exactly sideways, the move continued up and then consolidated in our white parallel channel, might I add. That was a 64% move over 1, 2, 3, 4, 5, 6, 7, 8, 9 periods, 45 days, a month and a half. So that's what we could be looking at now. And mind you, that was only a little 1-bar consolidation. This over here was a much longer consolidation, but the stochastic oscillator was pointed downwards, and that was kind of a weird one right there. So here we have another one back here in October of 2023. And once again, if we zoom in, where did we start moving upwards? Right here. And you can see down there at the bottom, the breakout from low volatility didn't even occur yet. And it started there, but wasn't even confirmed until the next candle. So you missed a big part of that move, that steep move upwards. And how much was that? You would have missed like 27% of the move. And then we did continue again up to 66% over the course of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 55 days, 2 months. So, yeah, I think we're looking for around a 60% move over the course of the next 2 months. And you can go back and test this time and time again. Now here we had one, and once again the stochastic oscillator was pointed to the downside. And I mean, you can tell it was rather steeply pointed to the downside. It wasn't like maybe it's going to switch around. No, it's... And then, so we did get a downwards move followed by a little bit of an upwards move. Let's see what those were. Now, when it is, when the stochastic oscillator is pointed to the downside, you do get less of a move downwards than when it's pointed to an upside. So that was only a 10% move down. And then after that, over the course of a couple weeks, and then after that, you got the move upwards of 23%. So you can go back and look at other times when this has occurred. Here's another one. Wow. Right here. And once again, if you waited for the breakout from low volatility on the BBWP, you missed the move. And this move was just over the course of a couple weeks, a 40% move, continued up to about 54% move before a pullback here. And that was over 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, about 9. So another month and a half. And okay, so let's go back to today. today we are here with the BBWP in low volatility for going on quite a while here. They got 1, 2, 3 blue bars there, meaning we're extremely low. And so is it going to break out on the next one? On the next one? We have 3 days left in this, 3.5 days left in this 5-day period, which would be Saturday, Sunday, Monday would be closing the 5-day period and starting a new one. And that makes a lot of sense that we would see a big breakout starting tomorrow or Monday. I don't know if it's going to... Maybe it could happen over the weekend. Maybe we get another one like Sunday, like on election day that faked me out. Election week, the following weekend after the election. I thought that we would return Monday morning to where we started on left off on Friday, and we didn't. We had that big gap, and I missed out. I missed out on getting into positions I wanted to be in. So that could happen this weekend. But not to me, because I'm already in my positions. So I mean, if we do pump up significantly, I may go in a little bit heavier. So we'll just have to wait and see. So what does that look like? Well, you don't have to be a rocket scientist to figure it out. 60%, if you're at 100, that's 160. But let's look at it as a function of with regards to time too. So let's start it where we dumped down to here, like at 89, just for the hell of it. And let's go. Oh, we want to go here, like 50 days. I'm talking about the end of February. End of February, say we get a 60% move. Oh, so we're not measuring from 100, we're measuring from 89. It takes us up to about 143 by the end of February. And that would be consistent. See where my dot is at and see where those trend lines are. Remember the red and yellow trend lines that I was talking about, connecting October 10th and November 4th? That dot puts us just to the left of those trend lines. So does make sense. Does make sense right there. I think we're about to blast off, folks, and I hope you're ready. But first, let's look at the stochastic oscillator. Because what is it doing? My God, it's pointed downwards. What does this mean? And why is it pointed downwards? Because we're clearly going up. I don't know, maybe it's confused. Maybe it is confused. Maybe once we break 102, that maybe once we get above this wick right here, maybe that'll flip upwards. Possibly. I think if we get a little bit higher this weekend, this will flip upwards. I don't know. I don't know how to reverse this. I mean, I could figure it out, but I don't want to right now. It would take me a really long time. So it's one of those ones. We are going sideways here for quite a while, and we're chopping up and down, and we're just above 50. Now I want to show you one other time, because I did see this somewhere else. Okay, that's where we went down. Oh, here we were doing something similar. We were right around the 50 center line here of the stochastic oscillator, and we were chopping around just like we are now. And then we did flip upwards, and that's that. So just wanted to show you another case where that happened like that. This one here too, kind of choppy, although we were coming up from a low. We did get a little bit choppy in there, and it flipped back and forth. So it's not out of the question that happened. That would happen right now. Now you're asking yourself, what about this FOMC meeting coming up? And yeah, what about it? Let me go to that page. So about the Fed, first of all, I wanted to address something I heard. I think George said it, that who is this guy? President Waller, Christopher Waller? I don't know what his name is. George was saying that he was saying that maybe the Fed would do more rate cuts than they led people to believe at the last meeting. But that's not what he said. He said, said right here in this middle paragraph on CNBC interview, if inflation continues on this path through the beginning of 2025, it's reasonable to think that possibly rate cuts could happen in the first half of the year. That's not really any different than what Powell said at the last meeting. He said they went from like 3 to 4 rate cuts to probably about 2 rate cuts for 2025. So maybe, who knows? But what this is really setting up for is an extended rally into. It's confirming that the bull market will continue into the end of 2025. I was thinking that it might get cut short here and just be over in March or April of this year. But now what I do believe will happen, especially since we're getting a late start here. I was expecting us to be rallying already, because we got to get up to like around 180 or something by March, April. Well, and what we were just looking at might get us there, but 160 is not going to do it for a top. We need to be up around 180, 200, I think, 225, depending on what part of the year. Well, let's get off of this page here. We don't need to be on this page anymore. Oh my God, I was talking, and I just realized that I was talking to myself. I wasn't recording. So I don't know if I double hit the record button, or I've been talking for a while at other times and wasn't recording. Anyway, well, we'll just have to wait and see when the video comes out. I'm not going to watch it though, so this will be a big surprise. So I was talking about the Fed and rate cuts. I don't know if you heard the part about President Waller indicating that if inflation stayed where it is, that we might see rate cuts. It would be reasonable to expect rate cuts to start in the first part of 2025, is what he said. Now, that would lead one to believe that maybe we do see a couple more in the end of 2025, and that would be really good, because it could extend the bull rally through the end of 2025. Now, I was up until this point, I was thinking that the bull market would probably end in the first part of 2025. And if you watch, excuse me, Michael Pizzino in his Wave 5 of 5 that we're on, it would indicate that we're about to start the fifth wave of the whatever kind of thing that is, that with all the wave theory things that he talks about. And he does make a very good case, and he is a very good wave drawer. That would lead one to believe that this is the end. We're on the final move here. And maybe it's about to start, and it might last a couple months and then be done. But I don't think that's what's going to happen. Now, I think that we are going to rally into March, April. Maybe the rally continues into the summer, and then that's it. Yeah, it could do a lot of different things. But I think it's going to go on longer than March and April. I initially thought it would be done there. And, but either the rally may continue longer into the summer, into June possibly, or we do something like we did last year and see the rally, continue to March and April, and then consolidate sideways and maybe downwards slightly, and then rally upwards again towards the end of the year. And that would, if we do get more rate cuts, if the economy looks really good, and it would indicate that they can cut rates even more towards the end of the year, then that certainly makes a lot of sense. And especially with this crypto-friendly administration and all the things they're talking about with strategic reserve and everything, looks like they're really focused on crypto. And it's just hard for me to believe that the bull market would be over a couple months into this new presidency. But it would make sense that it might get a little bit extreme in the first couple months and then need to blow off some steam for a little while before rallying onwards. Could get, it might not even be like last summer. Might be more more to the upside rather than consolidating sideways and down. Maybe we have some pullbacks and then moves up, and then pullbacks and moves up, and what have you. Who knows? But that's a long time from now. But the point is, I don't think the bull market's ending in March or April. I think there's going to be plenty of opportunity this entire year. But we will just have to wait and see. Now, I did want to discuss the upcoming FOMC meeting, which is right here. Now, this is the one coming up right here. Hey, I don't want to select all. 28th and 29th. We will hear from Fed Chair Powell on the 29th of January. And you'll notice that we don't have another one until March 19th. Now, that one has an asterisk next to it. And then it skips one. And then there's another one with an asterisk. And then it skips one. And there's another one with an asterisk. What does that mean? Well, here. Meeting associated with a summary of economic projections. So every other meeting, they have their little sheet with their little dots on it where everybody predicts. What do they predict? They predict something like what they, their economic projections, where they think the Fed rate will be over the course of the next 12 months or something like that. Or the course of the year or something. I don't know. So that's what those asterisks mean. And you'll notice that this upcoming one does not have an asterisk. The ones with asterisks are more important, more influential, because they let you know what the members are looking at. now, are expecting the future to be like. And this one doesn't have that. We already got those last meeting, and it was hawkish. It was pretty hawkish. They went down from like 3 to 4 rate cuts this year down to 2. So this meeting, in light of the previous meeting, I don't think can be any more hawkish. It's certainly got to be more dovish, especially with the, that comment by President Waller. So I don't think this meeting upcoming is gonna, have the potential to really affect the markets that much. We're not going to see a big dump, or maybe a big pump. Maybe we'll see a pump because I think it's going to be more dovish than the last meeting, but I don't think we're going to see a big dump from it. So, anyway, that's all about That's about all I wanted to cover, and I'm certainly gone on long enough. And I really wonder when I did stop and start recording, because I might have spared you a lot of rambling, or left out something important that I wanted to talk about. So we'll just have to wait and see. And we'll see you next time.